You have questions, we have answers. This is Jane Miller.
And this is Ken Miller. Welcome to our show, all about real estate with Ken and Jane. Well, Jane, summer is here and the season is heating up. I'm sorry for that. I was thinking we were going to talk about, is the market getting hot or not? So the inventory has been surprisingly on the low side. Really, it's been from the winter carrying through the spring, and now that we approach summer, it's still relatively low. So we're going to talk about some of the reasons and ideas why the inventory remains low. And typically, the spring and the summer are the seasons when people want to really put their homes on the market. The homes show well. The landscaping. So we're going to break that down.
Actually, before we start, Ken, I'm a little bit disagree with you because I think for the sell market, right? The market has changed dramatically in recent years. Used to be what you said as a traditional, a lot of my sellers, right? Especially the homeowners living in the same home for 20, 30, 40 years. They think, let's wait till, spring, Easter, that wait till the flower, is blooms and my house look better. But to be honest with you, Ken, when your house blooms look better, so does the neighbor's house, right? Every seller's house look really nice. So in fact, I always recommend our client, if you want to sell, the season start the end of December, January. Every year, I providing the owner's schedule permit, right? I understand, I respect it's family season. If it's a Christmas, New Year time, right? If the owner is away or they're okay with it, I always highly recommend them to put a house on the market at the end of the year because a lot of people have a free time that week. After the Christmas, after the turkey in the tummy, after the gift exchange, what they do, they lie on the couch or chair, whatnot, and open their phone and see what's out there. And then they would have a time that week to see a lot of properties if your home available. And many family, I totally understand, they have a family come, they don't want to be bothered. They take some take the home temporary off the market or not show, or they want to start later. But to families who do have their home on the market is always have a very, very good outcome. It's happened year after year after year. Last year, we had an open house on New Year Eve because that was a weekend. The owner said, "Are you sure?" I said, what do you got to lose? You got to visit your family. I said, I will be there. Don't worry about it. We had, up to 10 families, I believe, and we sold that home that weekend. So once again,
you had an open house on New Year's Eve, it didn't carry into the new year. That would be an innovative thing to try to actually have an open house on New Year's Eve. Then you could have the record for the only person to have an open house on the first New Year 31st and the first.
Unfortunately, fortunately, there's no Sunday on the field New Year Day yet. When it happened, I'm sure maybe we will do that again. So that's really, and it's good thing to obviously, for the people who want to have a day off and enjoy their family is fantastic. But for me, I don't mind work on the holidays.
Right. But I think one of the main reasons why it's always been suggested that if you can get your home on the market earlier is because there's less inventory, so less competition. Yes. So don't wait till the spring because there's less, you're competing against less homes, so your home will stand out. So that's always been, I think that's been the traditional approach for saying if you're ready, any time's a good time as long as your home is ready and it's in showable condition.
100%. Just like you ask your financial planner, when's the best time to invest? They said, whenever you're ready, that's a good time, right? The real estate is the same thing. If you can put your home early in the, December, January, February, March, and that's a good month to start. And particularly, I know it's not about today's topic, but I can't help myself to give my opinion there. Right. And particularly for the home, really you have a minimum curb peeling, the yard. If your yard is a good yard, but nothing fancy like the really nice landscaping and the trees, the flowers, I think the best time to do is the winter time, because at that time nobody has a beautiful flowering plant
Nothing
yard.
is blossoming and
yes,
and lush.
exactly.
Even if you do have a lush lawn in the spring, it usually nobody's lawn is really that's
the best time
in January and February.
Yes. But if you do put your home in a spring market, you have to really do some landscaping. I think a few $100 of fresh flower definitely make the place look really nice and happy, attractive.
But we don't got any inventory.
That's why I'm sorry. I'm just off the topic all the way. But that's the thing. Having said that, Ken, this year in December, January, February, March, the market is very tight with inventory, as you know.
Right.
And
the springtime it opened up a little bit. Again, we're talking the Central Jersey because that's our listener base. We're not talking about other states or really the Southern Jersey, but at least in Central Jersey, it's still relatively tight as compared to the prior years.
Absolutely. It's a very tight, especially early this year. It's almost nothing coming up, and later in the April and May, and you do see something from time to time, but still it's very much a seller's market because of low inventory. Compared with the buyers, yes.
And now that leads us to the topic of today: is why does the inventory remain relatively low in comparison? So we've come up with a bunch of different reasons. Not some of them.
I'm sorry it takes us so much to get into today's topic.
That was a broad introduction, right?
That's right. So but hopefully it's helpful.
Right.
Yes.
Which is good because that remains a seller's market. As we've said many times, it's supply demand. So when there's low supply, the demand is increased because they don't have much to pick from. So you're one of the pickings, and then they just bid it up, and
that's right.
Keeps the price up. So that remains a seller's market. So point number one. A lot of people during the last, probably the last 4 years, now we're going back to COVID because COVID started in 2020. Wow, we're already in summer of 2024, so it's been been a solid 4 years. But anyway, during 2020, 2021, the interest rates were artificially low, so a lot of people took that opportunity to refinance to a very low rate. So they're locked into a low interest rate, so they've satisfied a need. And what they did with that refinance money, they may have used that money to invest in their lifestyle by either adding an underground or above ground swimming pool, a deck, expanding the kitchen, building a second master bedroom suite on the first floor. So they've taken advantage, and they've made their home suit their lifestyle.
I have to say to you, Ken, you're absolutely right. In the past, before COVID, I often have a client ask me, say, Jane, I think we outgrown our house. Okay, we want a big kitchen. Our home was built in '60s. The kitchen relatively small, or I just didn't have. I love my house, but I didn't have a swimming pool, or I want to add, second master bedroom on the first floor, so our parents can come, spend time with us. They don't have to rush back or stay in the hotel. So I have a lot of clients ask me the question, what should we do? Should we add on to our existing home, or should we buy a new one? In the past year, especially when we're in the low market, 11, 12, 13, I always tell the client, please don't do renovation, don't add on, because you're going to first of all, there's a lot of work to do. Okay, you get what you want, but it's still a lot of time to get work done. But most importantly, you may not get your money back. Say, for example, when you build for your home, you always want the best design, best material, and everything. But when you sell it, it's only for your purpose.
Right.
The buyer may not give you the full value.
But isn't that true in any market chain, that you may not get your money back? I mean, that's even true.
No,
you may not get dollar
COVID, yes.
Right, but you may not get dollar for dollar back necessarily. Like depending what you do. Like if you build for example, a swimming pool. A lot of people like a swimming pool, but there are certain people that may view an underground swimming pool as a liability because they've got to maintain it, they've got to clean it, they've got to worry about people hosting parties. So a lot of people may not just want a swimming pool. Period. So it may not be, even though if an underground pool costs $50,000 or $100,000 with the even more with all the fancy a lot of people may not value that have the home. A majority will, but so it's not a guarantee.
I totally agree with you, Ken. And that's why in the past when client asks me this question, I would tell them, you're not going to get your money back. That's exactly what you said, know. And better you buy one with all what you wanted in it will be cheaper, especially 2011, 2012, right? And then with your current home, you can either rent it out for the time being, or even you sell it, you sell low, but you bought much lower too, because the market, right? The bigger the house, sometimes the more discount in the downturn market. So I always tell them, don't do much, renovation rather than buy one what you wanted. But that didn't work this time. This time is a lot of people, they can, refinance on their home. And because before, if the interest rate was sitting 5.5 before COVID, for example, at a COVID, they could really get 2.5% loan and get 50, 100, 150,000 out of the home, do whatever they want to it. And the monthly payment remained the same.
Went down, right.
Yeah, it remained the same because
after
you got money out. Yeah.
Right. If they get money out, but if they just refinance, their monthly payment gets dramatically reduced, then they can have that money. They can either fund it themselves or refinance the house and then use that equity from the refinancing to do the home improvement projects.
Absolutely. So this time there's a lot of people, because COVID, you work from home or you're just home. I mean, COVID changed a lot of people thinking. So what they did was a lot of people renovate their home, make it what they wanted. So therefore, they have no need to buy another house. So they're completely happy. They like the neighborhood. They like where they are. And but the most importantly, they got money out of the bank without any real cost to them, because the monthly payment the same or even lower. They got what they wanted. So that's big chunk of people are not selling.
All right, and that's a good break point. We're going to take a short break. We'll be right back after these messages. All right, welcome back. So we're talking about reasons why the inventory remains low. So we covered just before the break that a lot of existing homeowners are satisfied. They refinanced during COVID. They added the home improvement they wanted, whether that was a swimming pool and a deck, or maybe big kitchen, or maybe all three. Three. And then now they're having a party. They're enjoying it. They're really comfortable. And I think that leads kind of to the next group. There's really no motivation for them to move. So they're really, and there's no motivation. They're very comfortable and satisfied with everything
so
they've got.
this is a big chunk of the homeowners.
So you lose a lot of homeowners that have no real need to find a bigger house, or because they already made their house bigger.
Yes, or kind of where they want, what else the features they need, they have it. And the second type of people, I think, because they already refinanced their home, right? They get a very low rate. Now, if they go anywhere, first of all, there's no inventory anywhere, because, if it's no inventory, where are they going to move to? So that's a big problem, right? I have a lot of people, they say, you know what, Jane, I've been living here 30, 40 years. I really want a change of scenery, but where am I going to go to? So it's like a music chair, right? When the moment is kind of stopped, so there's nowhere you can move. If you work, just think about it, Ken. If you work in a company, everybody happy, everybody stable, the jobs, unless you create a new position, which is like a new construction. But take that aside, if there's no new jobs / new construction per se, if everybody happy or not happy, but they're not moving in their position, there's not much you can do to move up or move aside. So that's to a lot of homeowners, right? They want to move, but they really can't find a suitable home because lack of inventory everywhere, all category of homes. So that's the second reason why they cannot.
And then I guess a third reason why would be maybe part of that group. It doesn't make financial sense because they're locked into a low COVID rate, COVID interest rate, and now the interest rates are hovering, in the 6.5%, 7% or close to that. So it doesn't make financial sense for them to sell their home, they pay off their loan, then they have to assume if they're in the position where they have to assume a new loan, they're going to be paying double, at least double monthly payment, and it's just a shelter shock to them.
Yeah, so that's why they feel maybe you'll wait a little bit.
So they figure maybe even if they want to downsize or go to the adult community, they figure, you know what, I have a single family house, I don't want to do the maintenance, but if I'm locked in a 2.5% or 3% rate, I'll just pay some contractors to cut the grass and do the lawn care and do the things, and then I'll still be ahead of the curve. Whereas if I move to an adult community or somewhere where the maintenance was taken care of, I'd be paying so much more in my loan.
Maintenance fee, maintenance fee,
plus the maintenance.
You save on the property tax because it's lower, a little bit lower, but on the other hand, you pay a higher maintenance fee. HOA. Right. For the facility, if you're enjoying it, it's great. If you're not, and obviously, the money now for you to hire your own crew to take care of your property maintenance here.
Right, and these are ideas that we came up with, I think, just based on common sense. I mean, there's not really any. We have data just from your interactions with clients and just the whole market pool. So it's our personal. I mean, there are personal opinions, but we believe
I could be wrong, but
we believe that it's founded on common principles.
That's correct. Yes. And also, I think, Ken, I mean, besides these items, right? I think there could be other reason because in the U.S. now we are really have people from all kind of culture, especially people may from Europe, Asian, and which we experienced that in the past. Luckily, U.S. never had that before, but other cultures definitely did. So when there's inflation keep going up, right, and uncontrollably, God forbid, that happen here, but I hope not. But a lot of people want hold on to real, asset per se, like the house. I had quite a few clients. They bought another home, but instead of selling their current home, which is there's a tax benefit if you're living in the home for certain years, when you sell the gain, the gain is $250 for person, $250,000 for a couple.
Gain tax,
capital is a tax free.
If it was your primary residence, right?
Yeah, absolutely can. But once again, we're not here to talk about that. You better talk to your accountant. But even though with this type of benefit, some owners still chose to hold on to it because they believe the property they have can against the inflation or any potential financial market meltdown in two ways. One, because the rent is directly linked to the inflation because rent going up when inflation go up. So they feel that's protection against the inflation. Secondly, in case the financial market has any issue, the home is still worth something. I mean, I was told a story by one of my...
in other words, just to summarize, just to categorize this group, so these are a group of people that do move. They find they have home A, they acquire home B, and they end up keeping home A and say, you know what, I'm not going to sell home A. I'm going to use it as a rental property. So it creates inventory in the rental market, but it excludes that home A from the seller's market.
That's created low inventory
because they want to hold on to the real estate as an asset and as a hedge against inflation. They don't want to just liquidate that home and they don't need the cash per se. So they figure that holding the real estate is a good asset to have because it's going to appreciate and whereas they're nervous about the relatively high inflation and what could happen to the U.S. dollar.
And now there was one of my past clients shared a story with me. I mean, once again, I have no way to understand the true situation. Either it's really happened or it's a joke. I'm not quite sure here, but I'm just relay what I heard. And one of my past clients said during the Soviet Union collapse that time, so you were millionaires when you woke up in the morning. Suddenly, the currency doesn't really mean anything. So the only good thing for that $1 million you have is make it a wallpaper. So I don't know if it's true or it's just a joke, but I think that may affect certain people's mentality. That's why even though they in the traditional way, they would have sold their home because they have a tax benefit, like couple up to $500,000 capital gain waiver, the tax on that because you're a home resident. But now they decide not to sell.
But there's also a benefit to, there's not to make this whole show about rentals, but there's a big benefit towards renting your home because you get to deduct the repairs, the management fees, painting, decorating, improvements, appliances can be depreciated, and you have a depreciation scale. So there's a lot of things that can be used as a write-off to offset the rental income.
Yeah, absolutely, Ken. I totally agree. Yeah, I mean,
yeah.
but that's lead to another question, Ken. I agree with what you said, but some property, in my opinion, is really a good rental property, but others I think may be better to sell in this low inventory market. First of all, you get a really high, return on that. Secondly, it's a tax benefit because you're home resident.
But the fear like those people have, let's say you have the home, you sell it for, let's say a home in Central Jersey, $500,000, which isn't much for this market. What the fear that people have is they don't want to sell it because they have nowhere to park that $500,000.
Yeah, where to pop out. Yeah, exactly.
They don't want to put in the bank. I guess they could get a CD rate and or a treasury bond and get some get a decent, more decent rate of return on the interest, maybe 4%, 5%. But they figure, what are they going to do with that money? And they don't want to just keep it in a bank account, and they don't want to. They're maybe hesitant to invest in the stock market. So there's really, you could buy gold. You could do certain. There's only so many things you could do with the money. I guess you could go to cryptocurrency if you want to.
That's
really,
even more.
But that's even
this kind of people this group of people is very conservative.
Right.
So they probably
right. So your clients, so they have figured that's the best bet. Is at least the real estate it's the old saying, brick and mortar. It's tangible property. So you have nothing. You have something tangible to go back. It won't disappear. Like whereas with the stock or with crypto, could be up, it could be down, or it could be all gone. Which has happened unfortunately with stocks and certain cryptocurrencies.
You really have to have a good, very good heart before you're heading into any financial market, right? Otherwise, you'll have a heart attack when you sit up and down.
So that's why real estate is still relatively stable. And if you have it, and plus if they know the area that they have the real estate in, if it's in an area they're familiar with, they know it's going to appreciate over time.
I think a lot of time, Ken. I mean, any financial planner will tell you diversify is the key.
Of course.
Diversify. And real estate market, asset is really good. Real estate asset really good, but the liquidity could be issue if you need it, down long term. For example, 2011, 2012 take you much, much longer to sell home.
Right.
I saw a lot of homes 6 months, 12 months, on the market, and with a big discount on the haircut on the price too. So there's everything come with a risk.
So we've been spoiled. How many years would you say we've been in this spoiled sellers market?
Probably
before
4 or 5.
COVID, even before COVID started in 2020. So even but prior to COVID, it was still we were 2019.
No, that was stable because I would think 2011 market went down.
Soft,
So 11 and 12 was really the lowest point.
Market,
and then by the end of 2012, the market started to show the improvement because I remember that time, the end of 2012, a lot of investors just came out shopping. They think they're the first one. How do you know the market is going to bounce? You have a bargain hunters come out. Let's go, Jane. Let's go shop. So they start instead of buying a handbag and car, whatever, they come buy houses. So that time I represent a lot of buyers, bought a lot of investment property at a very low price, and the market started to bounce back a little. 2013, 14, 15, 16, 17. 18, 19. So it's not like dramatically increased back to 2005 and 6, but it is on a positive trend to stabilize and gradually going up.
And then we did a comparison from 2019 through 2023 on a prior show that the market went up on average about 30%.
About 25%.
25 to 30%.
And then further up, now compared with 2019 before COVID, I think on average, it's about 35% now. Obviously, it really depends on when you bought it. If you bought on a high, obviously you may not get as much. But if you
what we're talking about is the price values. Like in 2019, if the home sold for $600,000, typically that same home minus any improvements, it would sell maybe 30% more than it did in 2019.
I understand, Ken, but if you bought high on 2019, and a lot of time, right? I mean, it really depends. Sometimes it really depends what you bought, but average, you're absolutely right. It's about 30-35%. Sometimes could be even 50%.
Right. All right. We're almost out of time on this show, so let's go to the final point. Would be that it's basically the natural science of the market correction as to why the inventory. There was so much excess inventory in the past few years that the market is just saying we gobbled up a lot of what was abnormal sellers selling of inventory. So now the market is doing its correction.
Yeah, automatically
correction.
Yeah. Mm-hmm. That's more like a 2009, I remembered, because the government gave the first-time home buyer grant and second home buyer grant. And then a lot of people was going to buy later, they bought it. So you created some excitement and a purchase buyer pool in 2009, 2010. And guess what? What happened 11 and 12? Right? Because all the people were going to buy 11 and 12, bought 2009 and 10. So 11 and 12 was hit the bottom market. But by the 13, first of all, as I just mentioned, investor came back, the bucket hunter came back. Also, the people who was going to buy 2013, I mean, it's pretty much going to buy anyway. You know, the 9 and 10 put 11 and 12. So 13 market corrected itself to this no more cycle. Yeah.
All right.
Yeah.
All right. So that's the science of the market. And we're about out of time. So we hope you enjoy the show. We'll see everyone next week. Have a good rest of your weekend.
Enjoy your summer.